Oh yes, legends. How's everybody doing? Hope you're doing fantastic today. We'll be analyzing the situation for the price of Bitcoin, of course, taking a look at a bit of news later on, and what different scenarios am I looking at here with this drop that we've had in the last 24 hours. Make sure to destroy that like button, guys, if you do enjoy the content, and let's dive in right away into the comment section. First of all, guys, how's everybody doing? Make sure to destroy the like if you do enjoy the content, and we'll dive in straight away through the comment section. Say hello to the beautiful community. Anybody in shorts? Did anybody short the market throughout the last few days when we were in this consolidation? We were looking for topping signals in the triangle formation that we had. Basically on Friday, we were looking for one more leg to the upside, looking at a possibility of the price action finishing in this range. On the higher time frame, it is clear that we are still downtrending when we look at the 4-hourly time frame. Very much choppiness here throughout this pump in the last 2 weeks, okay, since we created that low here on the 21st of November, and now getting a bit of a move down. Question: do we form a higher low? Do we go lower? We're going to get the trading plans ready, guys, because what we do here on the channel is that we get many levels, many Elliott wave scenarios that could develop, and obviously with the levels of confluence, we speculate on different projections. The latest projection on one of the scenarios that was mentioned on the last video, not the one today, the one from Saturday, was looking at intraday levels, right? We had one right over here, which was interesting. Fair value gap. You want to be cautious, because if you lose this fair value gap, then eventually you could be looking at a significant continuation drop. And levels of resistance that were looking interesting was exactly the $91,700. Now, those are the two levels that you need to take a decision based on reaction. If you're happy managing risk, to either look for a short position or look for a long position. In this case, not interested in a long position here, because you need that reaction. You need the price to hold at least for several minutes, right? A few minutes, let's say, to get that, okay, we're holding this zone. It could be a good long position. But if you slice right straight through the level, then obviously we understand the major dangers that there is when you have a fair value gap like this, that you're likely just going to absolutely waterfall throughout this fair value gap, right? Which is most commonly what happens, as we can see. So we do know the trading plans. We do know, the exact moment on how to step in, when to not step in, right? And, this was no reaction whatsoever. And, very much aware throughout the last few days, guys, stay cautious. If you lose this level, you're likely going to capitulate here, right? And then obviously after the capitulation, there will be a moment where we'll have clarity, right? Where the price is going to start slowing down, and we can give some possible projections on what could be the next movements. And that's what's going to be explained today, guys. Remain patient, right? Know your trading plans. There was a long position here that I was planning on based on the reaction, okay? Very cautious, dangerous zone. I'm no longer interested to be in any long positions anyway in this zone. And you need that reaction. A lot of people don't understand this, because people want to know, where exactly am I looking for the long? Where am I exactly looking for the short, right? And we just enter and put some limit levels right there and, hope for the best. It does not work like that. It just surely doesn't work like that. You have levels of resistance and support as guidelines to take a decision responsibly, right, with good risk management. Anyway, just a quick note here, no financial advice ever in any of my videos, guys. This is just my opinion. We just like to structure some different trading plans that I'm looking at, okay, for myself, and I'm just sharing them here with you. This is just educational content, okay? Let's dive in through the comment section. First of all, and say hello to the beautiful community. I can see Staffer One already here giving love and power. Much love to you, brother. Daniel Singleton, good afternoon, my man. Much love. Always here giving love and power as well. Hit the like button, people. I did get a few DMs of people, managing to get into a short position throughout Sunday. Wasn't believing that this bounce was going to take us anywhere, right? The bounce that we had throughout Saturday and Sunday. Very, very poor bounce that was hitting that major resistance. This resistance was, looking at the 50% to the golden pocket with a value area high. And, we had many, Elliott wave scenario projections that, we either looking for an ABC movement, right, that could form a lower high here, faking out the value area high, or maybe a 1, 2, and a 3, right? This is the thing. When you analyze the projections, regardless if it's going to be a 3-wave corrective structure, we go higher later on, right? If it's not too aggressive of a drop, we get a reaction here and you consolidate, well, maybe we're going to bounce. And if it's not going to be a 3-wave corrective structure, well, what we're looking is a 1, 2, 3, right? Develop a third aggressive wave to the downside. And the opportunity area that I looked at, just based on the technicals, based on Elliott wave theory, value area high, the possibility of the high being in here. There's, we have many reasons to believe that the high could have been this one here at $93,000. Not on the Friday's live stream. Anybody that was here looking at the triangle, I was very much happy to see another squeeze up, right? We were analyzing this structure. This looks corrective, even though we formed a triple top scenario here at the 91,800. It doesn't look like it's going to form that Bart Simpson pattern, right? Bart Simpson pattern was a speculation, but the probabilities were leaning out for a squeeze out, okay, based on the triangle mainly, okay? When you have such a big range after a push to the upside, it usually creates a squeeze out, right? And obviously that, happened with the highest probability scenario to get to the levels of resistance that was actually some swing failure pattern levels, lower highs on the higher time frame bit that we see right over here, right? These are sniper trades, okay? I did get into this with a smaller position and I decided to add to the position as we got the movement to the downside, okay? But it was a very much acceptable trading plan, right? It's either this level, it's maybe this level. We got the yearly open, which is in the middle of this zone as well, okay? Yearly previous year close or this year's open, which is sitting at $93,300 or so, depending on what exchange. It's just an interesting area to consider, getting into a swing failure pattern if you want to attempt to try and catch the highs. And based on Elliott wave theory, we already had our reasons to believe that, this could have been the high, right? This could have been the high. There is a way of counting a 3-wave ABC, even a finished WXY. There is a way of fitting it, okay? We ain't going to go to the micro counts too much because I know people just can't take it too much with complex lower time frame Elliott wave theory. So we're just going to speculate on it was, 3-wave structure. We mentioned the possibility of the high maybe being in on the latest video on Saturday. And this is why, looking for shorts, at this range is going to be interesting for me at this 91,700. It might pop out a few $100, but the value area high, this green box where we did get resistance throughout the previous days. I mean, this was coming into Thursday, Friday, if I'm not mistaken, right? Yeah, part of Thursday and part of Friday. When we do get that level, it's been a very, very strong respected level. And that's basically where the price got the rejection with the value area high, giving us that speculative scenario, right? On we might fake out from the value area high of the range. And what we're looking at is either an ABC or a 1, 2, 3, right? And we turn out to be collapsing, right, in the next coming days, which is what's happened in the last few hours. So I know a lot of people get very, very confused because, we are traders. We are reactionary traders. And I don't know, and nobody knows what's going to exactly happen next and which is the scenario that's going to happen. But we can have some hints. Sometimes the bearish case and the bullish case come together in a same scenario based on this one right over here. Either an ABC could be interesting here or a 1, 2, 3. So the level where you have the confluence and the resistance to believe that, that's a good possible plan where the price could reject A, B, C, or a 1, 2, 3, we continue dropping, well to much lower levels, which has been the case. Okay, so we are reactionary traders. We need to adapt to the conditions. We need to adapt to, and sometimes you're going to have some scenarios that really align very, very nicely, and you have increased probability regardless if it's going to be bearish or bullish, if it's going to be an ABC or a 1, 2, 3 and continue to the downside. And it's a zone where you take action, right? This $91,700 is a level to take action. If you were going to break above this level, I would really not be interested in adding to the long position or any of that. Your clear invalidation would be the high, so any stop losses close to the recent high that we had on Friday at 93k is more than enough, right? If you break successfully that value area high of the range, you just don't want to be in that position, right? You don't want to speculate in a short. So we finally got that resistance. We ended up getting a pretty aggressive move down in the last few hours. Something interesting, if you want to take into consideration as well, we just lost the trend line, right? The higher low support trend line right over here, which could have been maybe enough for you to believe that we're going to get a major drop to the downside, right? So anyway, let's go through the comment section. We'll be breaking down a few things, guys. I got some scenarios ready, so bear with me here. I had a long position, compounded into the long, compounded into the short. Took profits from the long and took profits from the short as well. And I would be interested in not longing at the moment, okay? I'm not interested in a long where we at right now exactly, even though we're hitting the golden pocket from the pivot low to the pivot high, right? 61865 from the major uptrend of the last 10 days, right? Or 9 days, I don't know exactly. About 9 days. And we're hitting the golden pocket right now, which is getting a little bit of a reactionary bounce of a few $100s. If you're feeling a little bit sniper and you want to get into a long on the golden pocket, which is kind of SFPing from this higher low, it is an aggressive, a bit aggressive long, but kind of acceptable just because of the confluence. Golden pocket from the low to the high, and it's a higher low from last week's price action basically. So anybody that's feeling aggressive, quick little scalp to make some bucks, I would class it as an acceptable quick aggressive scalp, okay? But not, this would not be a zone that I'm interested in a long to say we're going to come up to hit the highs, right? We need a lot more information to I'm actually feeling a little bit more bearish on the higher time frame, right? I am prioritizing the downtrend to continue, okay, based on Elliot wave theory to claim these lows. So in this area, I need a lot of information. It's a long position that I would not take personally right now. I would have to see some kind of a sign of strength here and a corrective structure. And, then I would probably long the next movement, which is one of the plans that I want to talk about in today's live stream. Okay, so if you do enjoy that, if you are excited to know the different scenarios, make sure to smash up the like button. Okay, let's do a like button recount because my like button is not doing too well. It's not doing too well lately. So let's get to 100 likes if you do enjoy the content. And we'll much appreciate it, guys, because I need to see people that are interested in the content because in looking at the long-term path, I probably won't be here next year, right? Depending on the attention and the likes and the comments that you leave down below after the streams, it's super important for me to see that there is interest. There's people actually improving, people that are appreciating the content because I got a strike last week. The algorithm's not playing in my favor. So if that's not going to be working for the next coming months, who knows how long I'll be here on YouTube, right? It's super important that we do get attention, that, people enjoy it, leave comments, leave likes, because if that goes down progressively throughout the next coming months, probably won't be here, guys. Okay, so I need to see that attention, but because if not, I'll just say, people just enjoy watching other people, and that'll be that. So seriously, it is super important. Andy, I appreciate it deeply, brother. Stay, brother. Yeah, it's all about the attention, guys. Okay, so Why would you get a strike? Very weird. I know, it is what it is. It is what it is. It's a bit unfair. I just try and keep it quite clear that this is obviously we're looking at different scenarios, possibilities. I'm wrong a lot of the times. I'm right or wrong of the times, and we just try and figure out what could be the next movement, right? Because I am an investor in crypto as well. I do have Bitcoin, I do have Ethereum, I do have some altcoins, some of them not doing too well. But you do realize that if you're coming into a bear market season, I did sell some of my Bitcoin. A lot of people are aware of this. I did manage to sell 15%, just out of 125K of my entire Bitcoin holdings. I mean, that's quite a lot. I mean, it's not everything. Could I have sold more? Yes, but it's an investment, right? So I did manage to pull out some cash, not as much as I wanted. But it's we need to scale out, right? If you've been investing in Bitcoin for the last few years. And what trading makes it very interesting is that, that's where you can get that cash flow if you know how to do it properly, right? Slowly getting that cash flow, because if you're holding, who knows about this asset, right? When will it go to $200,000? When will it go to $1 million, right? If you're hoping by hodling, it's a long-term investment, right? So we kind of need to trade our way out to continue that cash flow, right? Which is what I've been doing always throughout the last few years, right? Not only buying and holding and hope for 100x, right? We just don't do that. It's just not staying real. So anyway, let's go quickly through the comment section and break down here the different scenarios for Bitcoin. What are the trading plans that I am looking at? Okay, I'm going to prioritize, first of all, guys. If you ask me, I'm going to prioritize the bearish case, still because of the major higher time frame downtrend and looking at Elliot wave theory. The priority is for the bears. I can flip my bias very quickly if I get some interesting information in the next coming days that will make me believe that we are going to take out, not only $93,000, but, possibly getting a little bit of continuation to the upside. And that is that's what we do. We try and detect that higher probability, right? I'm not here to say we're going to bounce right now, which, we are getting a reaction. It is a confluence zone, but it's not enough information for me to be confident to say, I like this long position. We are going to come all the way up to $93,000 and even higher. It's just not enough. It's not enough, and I'm feeling more bearish on the higher time frame. This looks more corrective, which the correction could continue, okay, and then take out the low, or it could basically get a dead cat bounce, very corrective structure, and then take out the low. So I'm leaning more on the overall downtrend of the last few months to continue, because there's no signs of this movement up, which we have been leaning more higher likely it's going to be corrective, highly likely it looks corrective. Even though on Friday we were actually talking about there's a higher probability that we squeeze out from here, right? That we do get a push up of $2,000 from this range. It's just very, very likely based on the information that we had locally here. But on higher time frame, I was more interested in looking for shorts in this zone and look for the rollover. The problem was, was this the high, or do we have one more high, right? And you kind of figure out, the different possibilities. And, as mentioned, right, because we did talk about the bullish case, the bearish case back on Friday, but we talk about maybe this is your shot on the weekend, right? Maybe this is the shot. ABC or a 1, 2, 3, we actually break down and we reject at 91,700. There's enough reasons based on Elliot wave theory to believe that this could be the high, and there's a lot of confluence here, and it's perfect for a lower high. Value area high, the price did prove that it proved itself that it did get resistance, okay, throughout Thursday and Friday's price action. So maybe this is the one that you need to be in, unless you did catch the SFP at $93,000. The thing is, it's in your best interest, right, always, to try, there's no way in a million years that I would want to get into a short here. there's no way, right? There's no way that I would want, unless you're looking at the 1 minute time frame. We're looking at a little bit of a day trade, a trade scenario that could last, maybe a couple of days, like a small swing trade, right? Looking for a bigger projection of a few $1,000s, right? Mainly when I do YouTube, right? Of course, we can, there's scalping scenarios, but we're looking at the projections on the higher time frame. But if you ask me, I would rather try and long if we can detect anywhere, the first A, B, C, the first A wave and the B wave, or the 1, 2, 1, 2, right? The first 1, 2s for a possible third wave. And that's, you want to be in the third wave or the C wave. That's the most important wave and the most profitable wave that you would want to get in, right? The big one, the big move. Okay, so on Saturday, we did that video update, watch before Monday, right? Watch before Monday. We try and get attention with those titles, but we talk about trading plans. There's a few trading plans, few levels, and this was the main one for short. 91,700. Watch this area because that could be the topping zone. And that's the one, that we could take out the lows, and we just don't know. It might break down. If you break down that fair value gap, then you're in the good trade, right? You're in the good trade, because if we talk about that execution here at the value area high of this range, as mentioned, there's reasons to believe that this could be the high. There's reasons to believe that you could form a 1, 2, 3 maybe, right? Or an ABC, it doesn't matter. If you lose that higher low from the fair value gap, you are looking for a small little capitulation. We were very much aware talking about this last week. If you lose this pivot, guys, the drop from the fair value gap is almost guaranteed. This happens like 90% of the times. It's very, very rare to get a big move up, and you got that fair value gap, to get the price action beneath halfway the fair value gap and get a bounce halfway the fair value gap. It's extremely rare. So if you lose that higher low, the collapse is almost guaranteed. And if you're in some short position somewhere in this region, right? Well, eventually you're profiting from that move. And you're combining confluence, you're combining Elliot wave theory, right? There's a chance for an ABC, or there's a chance for a 1, 2, 3. You go to lower prices. The weakness points, right? That if they are lost, that you could get that capitulation. So, that's obviously the level of interest at 91,700 range that you are interested in taking that chance as a trade. So anyway, yeah, enough talk. Just keeping a little bit of how we actually try and visualize the projections here. Porque es muy importante, right? It's important. My goal here is to teach you and to make you a better trader and actually get that consistency, right? So yeah, we're going to break down now a few scenarios, okay? Quick hello to the people. It's about time, guys. I like to talk a lot. But yeah, we'll break down the different scenarios that I'm looking at, guys, okay? And it is really a matter of being patient, having the levels, and draw the possibility, the possible projections using a bit of Fibonacci, Elliot wave theory. Where do we have the biggest confluence areas? And what I want to see on the price action to basically execute that trade. Keep it up, Andy. Great to hear. You're similar to me, very defensive trader. Luke, yes, I am, very much. Why would you get a strike? I don't know. They haven't given clarity on that. Okay, so it is what it is, I guess. Yeah, I did send a few emails to say, can you tell me please what went wrong, okay, with a strike? What did I say? And they just said it could be harmful or dangerous for the viewer. And I'm like, wow, okay. I just want to I want to protect my viewer. I want to educate. I want to let them know, how to use proper risk management and make the people better traders, because it is possible, guys. It is very possible. And obviously we try and, prove the people with the content that we talk about. Having higher time frame projections, like we're going to go to all-time high by 2026, we ain't going to go down that road. We are reactionary traders. We got many levels, many scenarios. We're downtrending. We just, thinking about the future, what's going to happen next year. Nobody knows. So yeah, we could have some projections on a higher time frame Elliott wave theory, but we like to focus on intraday scenarios, right? Because that's where we can scratch some dollars. You are great, Andy. I have appreciated you for years already. Evo, much love. Appreciate all you do. Thank you very much, Toddy. Good afternoon, everyone. Yeah, it's important, if you can leave a comment later on after the stream ends, guys, that will definitely support as well, okay? Let's help Andy help us. Leave your likes. Leave your likes and also comment after the live stream, guys. It would seriously help. Because, yeah, I'm not sure what's going to happen, guys, at least with me here. Let's see. If I do see a lot of it, people are really enjoying and leaving comments, right? Then obviously we'll continue. If not, well, yeah, who knows? Who knows, right? Let's go right away through the scenarios, okay? It's about time. Enough talk, enough getting, emotional. And let's go straight through the scenarios, okay? I am very much interested in the movement down. Just nothing has really changed based on last week's higher time frame point of view. I'm interested literally on the movement down from all-time high, which is downtrending. We understand that. I know it's, it feels nice to say that we're going to get a bounce and this is going to recover and all of that, right? But you need to trade the chart that you have and the information that you get from the charts. And when we speculate on the bounces after some aggressive moves down, we understand that it's not looking too great, and we understand the levels where the price could very likely reject. Okay, and yeah, we spotted this one just just over a week ago. Well, this was actually 20 days ago, not over a week. Time flies. Short position at 107k. We were analyzing this as an ABC 1, 2, 3, 4, 5 in the Z wave. A lot of resistance. You had value area low from this range. We just had a lot of stuff going on here to believe that we were going to reject at 107k. And obviously throughout the last few days, we are downtrending, right? And the speculation throughout the last few days was the 38250% Fibonacci from this pivot low, okay, at 107k to the pivot low right over here. If we are speculating on that we are in a bearish downtrend impulse, then you're looking for a wave 4 to top out at, somewhere at 93, maybe 90, 95 at the most. You realize that this is your limit zone, right, to reject. Based on Elliott wave theory for your wave 4, because a wave 4 after a speculative wave 3, that's what we're counting here, should reject in between 38250% zone, right? Most commonly, you can reject at 236, but I just never consider 236 as a level to short in a wave 4 in the downtrend in this case, just because it's shallow, and wave 4s like to get to the 382. 382 is a very, very common target for a wave 4, and sometimes 50%. So 236 Fibonacci, you always consider it a bit shallow. I wasn't that interested in shorts in this region, if I'm honest with you. I was very much aware that this could extend based on timing, based on Elliott wave Fibonacci retracement, right? 236 is just very, very shallow. So it became interesting the last few days to say, now is the moment. The high could be in. We're looking, interested in looking for shorts. On Saturday, we gave the possible level to reject, guys. The plans are created. It's only my opinion, my point of view, but the levels to reject were given on Saturday. Okay, we did pump here to this 91,700 range. That was the level, right? If you're waiting patiently, I wasn't interested in anything in this zone, in this area, in the middle, right there. It's just, I'm not interested. We either move down to levels of interest or move up to levels of interest. And you have a plan, you have projections, and 91,700 was the level that rejected. So it just shows you how, I'm not interested here. I would be interested here, and you wait patiently for that. And, then it comes to fruition, right? So, yeah, let's dive in through the higher time frame scenarios, okay? Still projecting that we just need to go with the downtrend. Still projecting that we take out the low at some point, Okay, that doesn't mean, guys, it doesn't mean the price, this could be the low. And, maybe this is a 5 waiver and this is a 3 waiver, and we're going to get some kind of a sign of strength in the next couple of days, and the price does this. That doesn't mean that, we need a short down. I need a short down here. Absolutely not. I'm interested in looking for longs. If we do get some price action that I'm going to explain in the 15-minute time frame, I will likely be looking for a long position. I will likely jump into a long position if the price gives me that information of sign of strength. So, but anyway, if you're looking at this scenario, it's much better to look for shorts in the last couple of days, right? We talked about an SFP from this lower high. It's either this one, it's either this one. I do not know which one's going to be the one that rejects, guys. We can have them. We can have the levels ready. Remember, these are guidelines. These are levels that I want to see the price reject. You have a few minutes to take that decision, put a stop loss above the high, right? It's either this one or there's the one that we mentioned on Saturday, right? Which is getting that bounce to 91,700. Down here, I'm going to talk about a possible shorting scenario, but I think we're not going to get that information till at least about 2 days. Give or take 2-3 days, because we need some more information, which has explained in today's video. So it's a matter of being a little bit patient. We talked about shorts the last few days. SFP from here. We don't know which one is going to be the one. 93K was the one. So, you got a few minutes to take that decision and put a stop loss above the high. Of course, as we do explain throughout Friday, this could have been the high because we had a possible projected move here in an ABC. It could be the high. And if it is going to be the high, we are looking for a lower high on the next bounce. And preferably it's in between 50% and the 7/8. We talked about 50% and golden pocket the other day, just because 50% was at 91,700, which was with the Valley area high. So you either short an SFP. There's no other way, guys. There's no other way. We talk about that a lot of the times. You either get into an aggressive swing failure pattern, or you look for a sign of weakness and then the bounce. And the bounce, you need big resistance to take that short with confidence to try and get into the third wave. Because when we're trading, it's hard. You can have some hints that the top could be in. Okay, there's some signs that the local top could be in here. But when you are trading and you're using Elliott wave theory, which gives you that edge eventually, you're interested in getting into the third wave, either in an ABC or a 1, 2, 3, 4, 5, right? You're interested in being in this wave. And if you want to catch even the wave 1 or the wave A, you literally need, if you want to get into a long here, which is catching the falling knife or catching the pump, you need to have a solid level. You need to have a guideline, right? In this case, there was a monthly level, I think, here, right? That got that bounce at 81K. But you need a level as guidance. You get below it, you're not interested. You get above it, you can execute that trade as a failed breakout of the level, right? In this case, the last few days, we had 93K or 93.7K. Use them as guidelines. If you're trading above the level, you're not getting into the short, right? That's what I do, right? You need to have these really, really strict rules, because I know that everybody does this. Even I've done that myself throughout the previous years, right? In my learning curve in trading, where you just get into a bunch of short limits or long limits, right? And you just, you kind of hope for the best, right? Let's be serious on it. There's no proper risk management or strategy. At least for me, it never worked for me. When you're adding and you're hoping for a reversal, and it should end up soon, right? It's gonna work for a few times, but when it doesn't work, it gets you wrecked, right? It's just how it works. So you need to step away from what gets you wrecked, right? Let's dive in through. This is the thing, right? What I want to explain. If you want to catch the high on the first A wave or the one wave, and then it's B or second wave, you either get into the second or B wave, or which can give you a good short trade if you have good confluence. Or if you want to get into the first one, you need to get into an SFP of either a point of control, a monthly level, weekly level, whatever you have, right? Or a major lower high for an SFP in this case. So it's just like getting into long here right now, right? I do not know if this is going to be the low. I didn't catch this long, but you would class this as an acceptable, aggressive long trade. Even this higher low right there, right? Even that one, or maybe this one. It's dangerous. You realize it could wick back down. This one's good because you do have the golden pocket Fibonacci retracement. If you want to catch the low, you need to have a plan ready in this case, right? I like it because we got golden pocket from the rally, and we got a major higher low pivot. That could be enough for you to say, right, I'm going to execute along here. It is a trading plan. You got good risk management. I'm just going to get into the SFP. Maybe, obviously, you're getting onto the bounce, right? Just to get into that long position. You're getting into the bounce. You're executing your stop loss. You're entering on the reaction, right? You're not entering here because you had a limit long. You're entering because you're recovering, right, above that pivot low, or recovering in the golden pocket, the 6.5 Fibonacci, right? You have a bit of a zone here for an entry. Stop loss always at the low. You don't want to risk it. So the thing is here, maybe we get an epic bounce, guys, and this ends up being a 3-wave corrective structure. Right? Maybe this, I wouldn't consider this a wave 4. So I would not consider this a 1, 2, 3, 4, 5. Wave 4 is very, 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 very quick. I would still say that this is still in the third wave. This is still a third wave, either a C wave or either a third wave. What that means is, yeah, we are looking for a larger bounce, a larger range at least a larger range or a larger bounce. I don't know, right? So if you wanted to catch the low, you need to have the levels, right? You need to have, I'm happy with the golden pocket and this higher low. And I might, I can say to you, this maybe is the low, right? And we recover throughout the next coming days and we take out 93K. There is a possibility of this, right? It's all understanding the possibilities. Why is there a possibility? Well, even though it's very, very ugly, there is a way of counting this as a 5-wave move up, even though it's horrendous, but there is a way. As long as you have the way, even though it's low probability, just because it's awful, structure-wise, your 5th wave is also the longest. It just doesn't, you're trying to fit something bullish, which reminds me very much of the price action that we had back here in the day. I'm not sure if there's any legit followers. We were very much confident, especially after this movement down, that this was a corrective structure, okay? And still, even coming down here, we had to have a bullish projection, right? You need to have one. Even though you will run out of bullish projections, and then obviously your main 90%, 95% probability is just going to take out the low at some point, right? And in this projection, we had an expanding diagonal with an ABC flat here, super long in time, and an expanding diagonal for your wave 1, wave 2, right? And then we break up in a wave 3, head up to all-time high in the next couple of weeks. This was low probability, but we had to talk about it because there was a way of counting it. There was a possibility out of the blue. The same thing happens here. I'm going to say, do I like the bullish case? Absolutely not. I'm in favor of the price taking out the low. I have to say, I am in short from higher, taking a bit of profits already. I am in favor of taking out the low, and I would be interested maybe in adding to this short depending on what happens in the next coming days, which I want to explain throughout today. And hello to everybody, the new people coming, okay? Gold, this, that, the other. We don't give trade advice. It is educational. Try the Discord. Much love, Litty. Much love to everybody. Masacro. Es posible range 80k, 93k. Absolutely. We'll take a look at that. Okay. I'll go through comment section later on, guys. But there's a lot that I want to cover here, which at the same time covers education. Okay. I try and combine. Let me know, guys. It might be crap because I think I'm combining education with the trading plans and risk management. So it kind of all trying to fit in, but it might be a bunch of crap. Maybe it is, guys. I can see, according to the last few weeks, because of the likes and the views, maybe my content is very bad, and I just need to leave YouTube alone. So I see this with the views, with the likes, with the comments after the streams, which is extremely important. So if you want to still see me here in the next coming months, guys, I need big support, okay? And if this is very valuable for you and you don't want me to leave YouTube, I need that support. I need that to see that people that are enjoying this and really saying that this is gold, right? This is like really good education and it's going to improve my trading. And I need to see that, of course, to continue here. So anyway, let's, as mentioned, right? As we are reactionary traders and we adapt, we are very neutral. We can have a favorite scenarios. Like my favorite scenario on the higher time frame is to take out 80,500, and based on that scenario, I'm very interested in looking for shorts in this region, as explained, right? The 382 to the 50% Fibonacci would be the zone where the price rejects here. So we try and go through the 50-minute time frame. Usually we'll go through 50-minute, guys. That's where the meat and potatoes is, right? Where we can detect those sweet spots, those possible entry points, right? 91,700, right? Throughout yesterday's bounce here. That's like the sweet spot, guys, right? That's the one where that could be the lower high. That could be the wave B or the wave 2. That's the one that could have a very, very good entry. So we'll get to that right away, guys. But I just want to let you know, we don't have only one scenario. We're not only bearish or only bullish. We can have a favorite one, but we need to understand also the other scenario that we don't like too much, right? Which in this case is the bullish one. I don't like the bullish one. It's not great. So, but maybe it does happen, right? This would be either an ABC movement down where it finishes in this region. I would not want to see a large correction and then take out the low, because then we could class this as a 5-wave impulse. I wouldn't class any of this being a wave 4 or anything, guys. This is too shallow in time. I would still class this to be part of the 3rd wave or the C wave. So yeah, maybe the low could be in here when we consider the 1 hourly, right? Looking at this, maybe this could be maybe it could. If you want to get into sniper trades, you need to have guidelines. SFP from this higher low. You combine it with the golden pocket. I don't see any much other confluence here to believe that this is a good long. We actually lost that point of control here. The only reasons here for that sniper trade is this SFP with a golden pocket. I haven't got much other reasons to believe that it's a good long, just purely based on golden pocket and SFP. When we consider Elliott wave theory, I'm going to say, yeah, there is a chance of this being a 3-wave structure and it's the end of it. But yeah, I would not count of it. I would not count on it, because this 5-wave move looks horrendous. It doesn't look nice at all. Your wave 5 is the longest. You need to fit a wave 1 here that is, because you can't fit a wave 1 right there because there's overlap. It just doesn't fit very, very nicely. Devil was pointing this out, but you need to have a possible plan B, because maybe the price, if you get a big impulsive move to the upside now, and you just suddenly get a strong move up like this that looks very, very impulsive, and you start correcting in a flaggy situation, I would have to consider that, this could be a low and you could break out in a wave 3 here. But we need this information, right? I need that impulse. I need that movement up that is invalidating a wave 4 in this case, right? For this to be pretty clear, that it's not an impulsive move down, we need to get up to the golden pocket, which is at $89,200, right, give or take, just above $89,000. If you do hit 89,200, then you're invalidating basically the wave 4 scenario. Of course, you could form a larger corrective structure, right, which is forming a zigzag down up, zigzag up here, okay, in a wave X, and then you form a flat, and then you move up, or you form a triangle. We just need to understand that this would invalidate the impulsive move down. And if you do get up to this level in a, kind of a pretty solid 5-wave move to get above $89,000, the correction here is going to be looking very interesting to speculate a long position, right? And, the zone of interest, which it always is in between the 50% and the 7/8 Fibonacci. But as explained, you need a clear move up to hit above $89,000. A clear 5-wave move up that hits $89,000. That's when you flip the possible probability of the price breaking out here to get above $93,000 in the next coming days. Speculating on an SFP and trying to catch the low, that's all good. But the probabilities right now on the higher time frame is that we are downtrending, and that the probabilities are higher to take out 80,500, because this movement up looks more corrective than impulsive. And now what you're hoping for is that this is the low, right? Which it could have a chance. It could have a chance, but let's stay real. You need a lot of information here to believe that this has been the low, and that this is the low right there still. So the next step here, and that's the same thing about this movement down. Movement down is a way of counting this impulsive. There's a way of counting that this is the high, as explained on Saturday. I would be pretty interested in looking for a lower high here at the valley area high. This is a very valid entry point for a short. You got enough confluence. Valley area high of a major range of a few days is enough, especially if you can spot that this could be a 3-wave structure finished. And if you can get a impulsive move down here, which you could, you can. You got the largest wave here. Wave 4 is a little bit long, but doesn't really matter. We can get to the 15-minute time frame, but there's a reason to believe that already. So if there's a reason to believe that that the high could be in, that you have a possible impulse down, where do you usually reject is in between the 50% to the 7/8 Fibonacci if you're going to form a lower high. So, and we literally almost hit the golden pocket. 7/8 to 50% is in between, that valley area high. If you're going to take the shot, it has to be here, right? Which was explained in detail, guys, on the previous video from Saturday. We talked about the B wave, C wave, 1, 2, 3. You lose the inefficiency, the fair value gap, and you nuke down. But your entry, you want to enter in the wave 2 or the wave B, right? To give you the best entry, good resistance, good risk management. So this is the same thing, but to the upside. I'm going to be totally honest here with you. Anybody that feels aggressive and that wants to get into longs, I personally would not want to short here. I would personally wouldn't want to long unless I catched the SFP. If I didn't catch the SFP, I'm not getting into a long after $1,000 bounce. Never in a million years. I would rather wait. I missed it, guys. I missed the long. I'd rather say I missed it. Do I want to get into a long here and put a stop loss at this low? The stop loss is already big. I would not be interested in that. So I would have to wait for the sign of strength. The sign of strength, look no further. It's getting that move up to 89,500, 89,200. Sorry. That's the golden pocket. That's the invalidation of the wave 4. I want to see a little push in the middle with high volume, 15-minute, 1 hourly time frame. I want to see a pretty nice push, little consolidation, boom, take out the highs again. And then, I want to see that 3-wave down that fails to get continuation. and then gets a massive move up to overlap the pivot low and pivot high. So I can really speculate that this is corrective. And, we're looking for longs here somewhere in this region, right? That's going to be the next plan. Obviously this would be the trading plan for me, to speculate that we're going to take out $93,000. 5-wave up to get to 89,200. Be patient. It might not do this exact thing, but it usually does something like this. So what's the best tool that you have is patience. Have a plan and be patient on the plan that you've created. And maybe it forms a V-shaped recovery. I mean, maybe it nukes down from here. Maybe it breaks up. That's why we create 3-4 plans in advance, right? To then, wait for that plan to come to fruition. You think that what we mentioned on Saturday, which was, I don't know where, I got it on the video. We were trading somewhere in this region. The plan was to move up to 91,700. That's the level of resistance where the price could get some choppiness. Put stop loss, your proper invalidation is the high. But I think if you break value area high successfully, you just don't want to be in that short. So, I mean, a stop loss at 92.4K or 92.5 would have been enough for a stop loss. If you break above value area high successfully with a bit of volume, you just don't want to be in that short. So, we create the plan and then we execute. Of course, it was a little bit easier throughout Saturday internally on the 15-minute time frame because we had a lot of information. We had a big range. The information is good. And as you have that information, it's easier to spot that level, right, of confluence and Elliott wave theory to get into the trade, right? The problem is today already with this drop, which we did talk about, it could happen if we reject from 91.7 and lose this fair value gap. There is a risk of getting a big drop here. The problem is when we talk about this projection after having a major drop down, it's going to take time. When you have a big massive pump into a region, it takes time to form a little bit of a range and get more information when you can actually structure the scenario that has higher probability, or it doesn't matter even with higher probability, that you have levels of confluence and a good setup. Because when let's just imagine that this is what we need to get that sign of strength. The price is going to chop around in this region. It might claim the low again or not. I don't care. It doesn't matter. You form a bit of this range and then you get this 5-wave move to the upside, right? You get this kind of a 5-wave move to the upside in the next coming days. You got a little consolidation right there that could leave us a point of control, right? Maybe it forms a little bit more of a range now and it claims the low again and then it gets the bounce. If you move up later on in a 5-wave move and you're looking to get a corrective structure here, you have an aggressive long maybe at the point of control and the golden pocket. That would be your aggressive long trade. But your more conservative trade is if this third wave to the downside fails to get continuation and it bounces up to almost claim this lower high right there, right? Overlaps this pivot low. That's already a good sign that this is likely going to be corrective. And that's where, your probabilities are in your favor. But you need this information, right? If we had this information on the candlesticks, I would say, guys, I think this is a good chance that we do actually, take out at least the local highs here. And we could project $93,000. We're going to dive in through the 15-minute because that's where we got the meat and potatoes, because there might be some internal scalps. Maybe some of you, I'm looking for bigger projections on the 1 hourly time frame, guys, just because we have time to plan the scenarios. It's much better for me to look at the 1 hour, 15-minute, because then people watch the stream later on, right? Maybe in 2 hours or 3 hours and see the plans that we're looking for. So they have time, right? If we go through the 1 minute time frame and there's an execution for a scalp, then the people that are watching the stream in 1 hour, they're like, well, that's no good for me anymore, right? This is why we do slightly higher time frames, right? So we have a little bit of time of for the people that want to watch it later on. The other day as well, right? The triangle, the probabilities of this, the triangle that we mentioned, the probabilities were leaning here on the price to get a squeeze to the upside. We claimed the highs, and a lot of people were saying, well, that's it, right? We're looking at a double triple top in this case. Bart Simpson pattern, it's looking exhausting and it's going to roll over. But when we were analyzing this scenario, the waves, and when you form a big move up here in a large consolidation, you just say it could be a bull flag, right? But if you're looking at a bull flag, people are going to say, right, bull flag, you got the pole here, and this is your projection. I do know someone that has a lot of views that was talking about this, and I'm saying, well, this is misleading. This is misleading because you're going to have people that are maybe entering longs and they're not going to take profit till you actually hit the target of this pole, which is a bunch of BS. Which is, it just makes me, it makes me very, very angry and sad. But anyway, the projections you were actually looking for, to take out the highs again, at least after getting this push up. And your chance is, if you want to scalp, is getting to the higher low, 50% golden pocket. We talk about this A, B, C, D, E, and possibly 1, 2, 3, 4, 5, right? Get that squeeze out to 93K plus, which it did, and it got the SFP for all of those aggressive short traders out there that were spotting that SFP lower high, right? Which was this one. We had two levels of guidance. Let's go through the 15-minute time frame. Let's get into the meat and potatoes here, because that's the only thing that I have on the bullish case. When we do take a look, I think that if the price takes out the low here again, if the price does take out the low again here with this shallow bounce, I would speculate on another double bottom. I would speculate on another double bottom. If the price forms a lower high here in this region and takes out the low, I would speculate on a local double bottom. You might ask yourself, why is that a good long? Why is it a good possible long? Because, when you do take a look at this downtrending structure that we've had, lower high right there, you got a couple of 1-2s, got a little bit of a movement down here. You got the big wave to the downside. It would be too shallow of a bounce. It's too shallow of a bounce to get a successful continuation move down here, right? If you get a very much a solid bounce here, enough correction to then, maybe break down a few more $1,000 from this recent low. But when you create the big move already, after getting this choppiness, maybe, a few 1-2s, this bounce is not enough. This bounce is not enough to get a successful breakdown. Okay, it's just like this movement down here. You get this movement down, very shallow bounce. You're not, it would be rare for the price to successfully break down from this low. Yeah, you can wick down a bit and then move up. But with this bounce that's very shallow in Fibonacci retracement, it's just rare to see it breaking down without getting a solid bounce and then breaking down, right? You got a big move down, solid bounce, solid range, and then you break, right? You need a kind of a solid correction, and then you break down. So, when you are chopping here in this region with a very, very shallow bounce after this movement to the downside, I understand when we consider the scalp mentality, right? I understand that if the price were to roll over from here, right, and continue this choppiness range and take out the low, I understand, based on experience and Elliott wave theory, that the probabilities of breaking down here are low. that, you know, but that doesn't mean that we randomly long here with the limit longs, right? It doesn't mean that, because obviously you can lose the low. It's just all about probabilities and based on what's common on the structures. But what you would have to create is a plan. This is why an SFP would be an option from the recent lows to then maybe get a larger corrective bounce to sweep up the recent local highs of this range. So, I mean, if you were to bounce already hitting the 382, 50% Fibonacci, I would still consider, a double bottom here locally would be a little bit skeptical. Because the bearish case scenario here, let me just get this out of the way. The bearish case scenario, which would be, this one right over here, where you're looking for a little bit of a range, a little bit of bounce, could be a flat, could be whatever. You know, corrective structures are, after a major drop, they're very, very hard to speculate on what exactly is going to happen. We could form a triangle here, maybe. I don't know, right? It's very, very hard to speculate exactly what could happen in this range. So the thing is, but once you get that bounce and once you get that range, regardless if it's going to be a WXY or if it's going to be a flat right over here, and then you form a movement down. I'll talk about a level here that looks interesting because we are getting a little bit of a bounce right now. This one right over here could look interesting. We could hit that level as we speak. Could hit that lower high at 87.7K, which is a reactionary level. After the major drop, right? Big inefficiency right there. It's the first little bounce that we do have at 87.7K. That could be an interesting scalp short for an entry on the reaction. Tight stop loss above the high. They're very, very simple to execute and very, very simple to manage risk. Super, super simple. Easy peasy. Lemon squeezy. You know, you get the reaction, short, stop loss. You get the movement down, you know, you're already looking for an easy 2-3 to 1 risk reward. But that would be one trade that I would be looking at here. We're going to structure that right now in the next coming minutes. That's probably also coming into the 382 Fibonacci, maybe even slightly higher. Yeah, perfect. 382 is slightly below, but 382 is just about $150 beneath that higher low right there. But it would be, a nice projection. It might even be here, the 1.618 extension, if we can consider an internal flat. Let me just get this out of the way, guys, because there's just a lot of noise. This pivot low to this pivot high to the pivot low right there, and reverse it. It's a little bit, this one's a little bit too off, really. I have to be honest here. For this to be an ABC flat, it's gone a little bit off the 1382, if I'm not mistaken. Okay, my bad. This is low probability to be a flat structure because we've hit the 1.618 extension. The 1.618 extension is very rare for a B wave target of a flat. Okay, so for this to be a B wave of a flat to form that ABC, it's unlikely. Okay, so maybe that we've already formed this low right over here. Maybe I could consider all of this already being a 5-wave move down. We could consider this already being a 5-wave down for either a third wave or a C wave, right? It's either an A, B, C, or it's either a 1, 2, 3, boom, 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 correction, 4 and 5. You take out the lows again. Where the price needs to reject, it's at the 382 to the 50% Fibonacci. Do we have enough confluence? Let's take a look at the anchored VWAP from the pivot high of last week, which is probably not coming down. So at the golden pockets, a bit too high. Session VWAP might be interesting. Let's take a look at the session VWAP here. Yeah, it's very close to where we're at right now. I'm not interested in any local internal movements here, if I'm honest with you. Let's go right away through different projections. Yeah, lower time frame. The thing is, I have to be honest here with you. Looking for a trade in this region. I mean, unless you're shorting the VWAP, I'm seriously not that interested, because I am so aware what the price could do here. Is there's an infinite ways of what the price could do here. You know, when you have such an aggressive move down, you can just literally form a triangle, a WXY structure. So what is best here is to remain patient to see what kind of pattern you could form, and then wait for one more low. Once that one more low happens, then it could be interesting, right? This is why we project this scenario here, right? This fourth wave, if you are feeling aggressive and you could detect that three-wave move to the upside here. So if you do get that bounce, I would consider this the finished third wave. And if you do get that bounce here, form a higher low. So you're getting a rally, you form a little bit of a correction, and then you get another rally to the upside here. This is the moment, right, on that third wave, that C wave, after, creating that bounce, correction, and another move up, that you can speculate on the wave 4. But I mean, this, for the moment, there's just not enough information. We only just recently had the drop here and claimed the lows. We haven't got a fourth wave, right? And you need a bit of sideways momentum. If we are speculating on the bearish case, which would be getting that 1, 2, 3, 4, and 5, right, to claim the lows again here. Where you're looking for that rejection is the 382 to the 50% Fibonacci. So it's in this box area between 87.5 and 88.3 would be your common zone for that rejection, if this is the correct count. Bear with me here. If this does push through and hits the golden pocket, we're probably looking at a larger structure which has a 3-wave down, a 3-wave up, and forms a flat later on, and it's a sideways WXY. It's just there's too much for that to talk about on that, right? Because literally we ain't going to talk about that, of course, right? It's a lot of speculation, but you just need to understand that the range could continue if you take out the golden pocket. Hitting the golden pocket in this case at $89,000 doesn't mean that we're going to take out the high instantly here. Doesn't mean that, oh well, this is a 3-wave corrective structure, we're going to take out the high, so I'm going extremely long. Obviously we need a lot of information, as explained at the beginning of the stream, which would be a pretty solid 5-wave move up here and a corrective move in the next coming days. This will be bullish. That's the moment that this will be looks very, very bullish, and there's high probability that you're looking for that rally at least to take out the local highs and maybe break out. Well, that's just information that we need to get, right? So what can we say? This is how it works. What can we say? This is how it works. Let's what else can we break down here, legends? I would class this as an aggressive short, okay? Let's say, I have to say it's an acceptable entry. If the price comes up to 87,800, depending on what exchange you're using, 15-minute, could arguably discuss it's an order block. It's the first major dead cat bounce after the aggressive drop that we had today. And if you have reasons to believe that you got a 1, 2, 3, 4, and 5, you have Fibonacci, you understand where the price needs to reject, which is the 382 to the 50%, between 87.5 and 83.3. You need to have some kind of a guideline, some kind of a level that is going to favor your entry and your stop loss, right? And for me, the one that I like, that I see here, if I wanted to speculate on a wave 4, it is extremely important that not only from here, which could have been a 1, 2, 3, 4, 5 finished third wave, I would give it a valid possibility that the wave 3 here has ended. What I need to see is not the price coming and shooting up from here to hit the level, because I would, this would be a bit aggressive. For me, it would be more important to see this leg to the upside struggle a little bit in the next coming hours, form that flaggy situation, and then get a push up. The moment I can detect that 3-wave move to the upside after that possible 5-wave move down is where I am going to speculate on a possible rejection at the required Fibonacci retracement of a wave 4, which is in between the 382 and the 50% Fibonacci from that third wave down. The main reason I could class this third wave down as a finished third wave is because we have a possible count, and this is a lower time frame, guys. You need to take this with a grain of salt, because sometimes you could get one more low, right, and you're still inside of the third wave, just because you have 1 2 1 2 3 4 5 4 5, and you just get one more low here. But this is why, if you do actually form a lower high from here and you claim a low again, I would class a good double bottom locally here, SFP. It's a valid SFP. Why is this local low again another valid SFP? Because as explained, when you do have a movement down here with a little bit of a 1 2 1 2, the big movement to the downside, and you haven't got a proper correction, right? A proper correction would be this. This would be a proper correction, and then you might nuke down, but not this right over here, what we're getting right now here. Okay, this is too shallow. I would consider this still part of the wave to the downside. This is still part of the same wave. And if you have had the most aggressive movement in the middle, when you have this movement, boom, 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 and you got this, bang, 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 I realize that if we do form a lower high here still, without getting a bigger bounce, that there is lower probability to break down successfully here. Just because this is a shallow correction, guys. We just barely scratched the 236 Fibonacci. It's a shallow correction to get, big continuation. That doesn't mean that because Andy said that there's low probability in breaking down, I'm just going to go all in here on the movement down to, I'm longing all of this area as we sweep up the low, expecting a double bottom. You need the double bottom. You need to recover from those lows so you can manage risk. The problem here of longing as you're moving down is, literally adding to position. Are you going to put stop loss here, right? You need that reaction at that guideline. And of course, the guideline that I would have here would be getting back above that recent low, which was created at 84,700. So you need to get that push down and recovery above this level to execute that trade and stop loss at the low. And this has the potential eventually throughout the next coming hours between today and tomorrow to actually sweep up the lower highs. What is common after a 5-wave to the downside is that the bounce that happens most commonly gets above the shallow correction fourth wave. Fourth waves, it is very, very common for this bounce to sweep up that lower high at some point. So that would be your main target for this like intraday scalp long position. Sweep up the recent lower highs of today of this range. So I would class this as an aggressive long, but you need the reaction, right? You need the reaction at the low. You know where to put the stop loss. And as mentioned on many videos and educational live streams and video updates, mainly live streams, we keep educational. Updates are usually talk about the levels and the scenarios. But what is more important here is the understanding eventually that the probabilities and breaking down from here, right? The probabilities are lower, but it's extremely important to get that reaction and have a good risk management. Stop loss beneath a low, give or take $100 or $200. Super important. That's what I would eventually look for here if I'm looking for an intraday setup to sweep up the local highs at a bare minimum, because what we're looking at here is a higher time frame wave 4, and more internally it is common to sweep up the 4th wave after a 5-wave impulse. So yeah, I mean, I would class this as an aggressive long. If you're trading beneath a level, I would say it's no longer a good long. If you take out the low and it continues dropping, you just don't. I just wouldn't look for a long here in this zone unless you're feeling aggressive, and you have a plan ready, which we could create one right there, because maybe this could squeeze out a little bit further down. And because you have a few multiple 1-2s here, 1-2, 1-2, you got maybe 3 1-2s, the 3rd wave, 4-5, 4-5, right? And you create another 4-5 here. Unless you do have a plan to long at lower levels before you take out 80,500, which could be this higher low right over here. Maybe this is a good plan. Maybe if you don't double bottom locally here, then and you break down, you might, we're breaking down, how low can we go? Well, understanding all of this, you could be forming a few more 4-5s here and get a decent bounce. If you were to break down from the recent lows and not double bottom, and you're breaking down aggressively, you can have a plan ready here at a major pivot higher low. I mean, for the moment, this one is getting the reaction. And this gives you an entry, guys, right? Yesterday, we talked about the short trade in this region. Not yesterday, sorry, on Saturday. You could have taken, I could have taken profits already, right? I'm talking about myself. Still be in that short trade at 91,700. Still be in the short to project we could hit 80,500, right? But you have the entry, right? The entry is there and your risk management is there. Obviously, you want to take some profits, right, on the way. But just to keep it clear, we talk about possible entry zones, right? Right now, it's too... I am leaning more on the bearish side, guys, that we do roll down to 80,500 in the next coming days. But we're just really talking intraday scenarios here and possible entries, right? Creating plans. Seriously, you just need to wait for those levels, because there's nothing more satisfying than coming to a stream tomorrow or a video update and say, guys, remember the scenario, the trading plan that we talked about, either a double bottom locally to get a little bounce to claim the local lower highs, and if it does not manage to take those local highs, you need to be defensive on this movement here, just in case you do take out the low and you do not create another double bottom. Then what you want to understand is, where could we bounce before taking out the lows at 80,500? If you get Fibonacci from this pivot low to the pivot high, the 7-8 Fibonacci, the one that's getting the bounce now, is the golden pocket, which did bounce slightly above $1,000, right, give or take, 1,500, right, or so. If you do grind here and then create one more leg down and you do not double bottom locally here, and it does squeeze out a little bit more, you got a major pivot right there, higher low, which is in confluence with the 7-8 Fibonacci, right, from the leg to the upside. And as you understand, or as I understand, that it would be quite rare to nuke down from here with this kind of correction that's happening right now, very shallow, right? Very shallow correction. I would consider this still being part of the major wave, because then what I want to see is a wave 4 and then a wave 5, and then say, okay, well, now we got a pretty solid 1, 2, 3, 4, 5, and then we get a larger bounce potentially, right? I would still consider all of this being part of the same wave because the bounce has been shallow. So this is why it is, quite lucrative here to basically, look for a little long. If you didn't catch this SFP, a double bottom makes sense. A double bottom would make sense to sweep up the lower highs of this zone. And if it does get a little bit of a squeezed bounce and it doesn't double bottom locally, and it's moving down, and you're like, we're moving down $1,000. It continues. You need to have a plan, right? And this would be a plan here. 83,500. Pivot higher low from the 22nd of November. And it's the 7/8 Fibonacci from this entire move to the upside. And when you understand Elliott wave theory and understand that a successful breakdown where we at right now, it's more likely to get a bounce or range or get a relief rally where we at right now, because the biggest wave happened right early this morning. And to get a shallow correction and get another big wave down to nuke down below $80,000 is low probability. It's low, there's a higher probability right now to form a range in this structure and get some internal local bounces, just because the biggest wave has happened already, which was early this morning. This was the big aggressive move down. So with that in mind, realizing the probabilities of breaking down here successfully are low, breaking down aggressively, which could happen even though, guys, it could still even happen. But that's where you create your trading plans and your good risk management. What's the trading plan? Well, as mentioned, double bottom locally to sweep up the recent lower highs. Right, you're looking for that double bottom to sweep up the local lower highs. And if it does move down a little bit more aggressively, you're still looking at a major confluent zone to get that bounce. And it's all understanding where to put stop loss, because, I like to explain this a lot throughout my videos. If we, in this box, I would no longer be interested in looking for a long in between 84,600 and 83,500. I will not enter a long anywhere in this box. I'm not adding to the position, and I'm not doing any of that BS. If you tap the low and get a reaction, I enter and I put a stop loss beneath the recent low. I got a reactionary bounce based on the projections, looking at Elliott wave theory, that we could sweep up the local lower highs. If you break that level, break the recent lows, I'm just going to be waiting for this pivot to be hit. This pivot higher low with a 382 Fibonacci. Based on the reaction, I could enter, put a stop loss, and look for that possible bigger relief rally that could happen in the next coming days, right? And this is going very internally, guys, into a little bit of action, more locally, 50-minute, 5-minute time frame, right? But that would be a little bit, if I'm looking for scalps, that would be a little bit of the internal scenarios. If you want to be a little bit more patient, I think it's relatively easier to be a bit patient and wait for what I would be waiting for here for the next coming days, guys, which is literally, just waiting for that that movement to develop properly. Where is it? Hang on a minute. I need to refresh this because it's not loading properly. Yeah, this one right over here, basically. Wait for a bigger range, wait for a bit of a one more low if it were to be the case. And where it's going to be a little bit more easier is once we create a larger range, take out the low, and then get that bounce, where we can structure this movement down as a wave 1, then a wave 2, wave 3, wave 4, wave 5. It's going to take a few days to develop if it is going to be this scenario. But I think it's going to be a little bit easier to detect eventually, because as explained in the last few days, you either get into an SFP aggressively from one of these pivot lower highs, or you entered throughout Sunday, which was the option that we mentioned on Saturday. There is an option to get in here at the 91,700 as explained on Saturday's video. There is an option here to enter at 91,700. Now, if you miss that short position, there's an internal scalp, I have to say, as explained. You can treat this pivot lower high as an internal scalp short. But if you want the proper short, to literally look for that wave 3 in the next coming days, this could be the low even, right? We need a proper finished 5-wave impulsive move down, which we haven't got yet. So we need that bounce and we need another low. And then this bounce right over here, which is, coming up to the 50% to the golden pocket, which is going to take a few days, is going to be the option to take that short, right? Because, when you think about the last, when we talk about a couple of weeks ago, when we were talking about a short, same scenario here. You either shorted the double top or you entered a short on a lower high here. Once the price is moving down, looking for, new shorts or looking for longs, whoever was, speculating on longs here in this region, well, obviously didn't have a very good time if you're looking for swing longs. But yeah, to get into a decent short trade, we're going to have to wait a little bit more, guys, a few days, for a higher probability, high time frame short, because you will literally need that completed 5-wave move down here, which we haven't got yet, and then the bounce, which is eventually going to happen at some point, but you're just going to need to wait for it. Yeah, I mean, I have to say, there's an acceptable scalp short here at the 382 lower, this pivot lower high. I have to say it's an acceptable aggressive entry if you get the reaction. But I wouldn't, I wouldn't take it as the ultimate high and then move down, which it could definitely. It could be a lower high and take out the low, but for the bigger move down, I would want to see that 5-wave move to the downside, wave 2, and then, you're entering a wave 2 to get into the wave 3. Just like on Saturday, right? If this is your wave 1, then you're looking for your wave 2 internally. So this is your lower time frame wave 2, 3, 4, 5. But if you want to get into the higher time frame wave 1 and 2, well, you're still forming your possible wave 1 and your wave 2 on the higher time frame, right? It's all scaling in from lower time frame to higher time frame. Man, whoever's unexperienced might see this as like, man, my brain's gonna explode, right? Anyway, whoever that was looking for shorts, let me know in the comment section. Anybody that was, got into some shorts in the last few days, either SFP from here or either the 91,700, let me know. Guys, one of my favorite platforms is Bluffin. It's another way to support the channel. I did get into the SFP. I added it to the position. I didn't get into this one yesterday, but it was I was already in the short and I already added to the position. But I've taken some profits. I would be happy to add to this position if we do get those scenarios that I've explained, right? Get that local bounce. I am looking for this, something like this. If we come all the way up to the $89,000, we could be looking for a larger range, okay? Looking for a larger range, depending on how we move up there. If we move up impulsively, and we correct, then we'll have to look for longs, I have to say. We'll try and detect that, guys. The information that we have currently is very, very, it's very, very, we need more information. We've only had a big drop, getting some choppiness. We need a bounce. We need a bit of a range, guys, to try and spot, if we are in a wave 4, okay, and then a 5. We need a bit of a larger range here. Okay, wave 1, wave 2. Guys, I'm looking for shorts. it's too fresh. We just had the drop, guys. Ranges is where we can detect the entry points, just as mentioned on Saturday. And let me know whoever shorted, guys. Anybody that's interested, remember that Bluffin, okay, BTCC, you got some great perks down below, guys. These are my favorite platforms. I am testing out decentralized platform right now, which is Velto. I am going to be trading more on this platform, guys. You will see me with more trades on Velto, just because I want to transition into decentralization, me personally, okay? Anybody wants to test this? This is like Hyperliquid 2.0, which you connect directly to your wallet, no middleman, which it makes it awesome, guys. Anybody that wants to test out Velto, you also have the link down below, okay, to test out Velto, guys. Give it a test. Let me know what you think, because I think we are moving into a decentralized world. We need to separate that middleman once and for all in the future. That's what we want, right? Middlemans are always bad. So, but anyway, I have to say, still my leading platform, you know, has been Bybit for many years. Bluffin is my favorite one currently. BTCC is great. You got some great deals and perks, guys, down below, which is from the platforms that I use. Okay, make sure to read down below. You know, the different conditions. They are Mr. Thomas Tyson. Here he is. 2 shorts running on from 124k, one from 93k. Absolute legend. Absolute legend. A short from 93k. You must have entered that swing failure pattern from that lower high here, which is like, this is for beast mode. I actually catched this short position. However, it was very small. It was a very small position. These SFPs, I have to say, I'm usually a little bit of, you know, you need to have big cojones, unos huevos bien grandes, to get into these SFPs aggressively with high capital. I usually enter SFPs with 0.5%, maybe 1% of my trading capital. And if we get the rejection and big sign of weakness, then I'll add to the position, right? Defensively. So it all depends on your trading style. It really does. It really does. You know, this was a scenario that I was talking about for many days as we were in this range. You know, it's either this one or this one, guys. This pivot or this pivot. Okay, in between, I don't want to participate. I need either the rejection from this one or this one. Tap it and reject. And yeah, I did enter with a small amount of capital, but I added to that position as we got the weakness. And because I was already in the position yesterday, I mean, I didn't enter or add on this trade because I was already in that trade, right? So, but it was just valid to enter. Anyway, my man Thomas here with the short from 124k, still running, and also 93k, which I would maybe I had a different strategy, but it's basically SFP from this, you know, this level, which was very much acceptable to get into that execution. Andy, I see you. What's up, Crypto Big Brains? Long time no see. Much love to you, my man. Smash up the like button. Staffer1, the legend here as well. Thanks, moderators, for joining. I'm in the short. You have Patron, absolute legend. Absolute legend. Yeah, I mean, this short, we talk about it. We talk about levels. We talk about scenarios. 91,700, guys. Remember, I mean, you know, this is by no means. I talk about 4, 5, well, maybe 3 scenarios, levels, and how I want to see the waves getting developed, the levels of confluence. But we talk about this would be an interesting zone, right, where I would be looking for shorts or looking for longs. And obviously, there's by no means, you know, this is exactly as predicted. This is a projection. Could have been completely wrong about this, and the price flies through and hits the highs. But what we do explain here is the execution. It's not about, it's realizing where the opportunity lies, right? I know where there could be opportunities, and I could be completely wrong about that opportunity. But this is why I need to understand. You know, I want to have some kind of a stop loss if I'm getting into a short here at 91,700, 800 range. I need to have some kind, give it a bit of a room. Don't put a stop loss $1, away from your entry, as soon as you execute it. But, give it a bit of room, but and understand that if you break this value area high, just no longer want to be participating in that short. So the opportunity is there, and you understand the projections, confluence, Elliott wave theory, and the risk management is the most important key for your success in trading. It seriously is that. I have a lot of experience with, different strategies, indicators, Elliott wave theory, but I can be blinded in getting into a position like really all in and risking 40% and being extremely confident. Oh man, I'm sure this is going to play out. And because I've risked too much of my capital, if it hits stop loss, I'm basically getting wrecked 50% of my account, which turns me into a bad trader directly, right? You can be the best analyst out there, but if you don't manage your risk and go in slowly on the positions and build it up throughout, the next coming months, that makes you a bad trader, right? And risk management is my sweet spot, right? And I will miss a lot of trades and I will get into very small positions, but it keeps me consistent. It keeps me consistent. It keeps me trying to get into positions in the future if I do get stopped out, because it's a small loss. It's muy importante, guys. Very, very important to manage risk. Andy, my man, hope you're doing well, brother. Baby genius, I am doing very, very well. Much love to you. My grandma always told me crypto is for shorting. It actually is. It actually is. Especially when we have, so many different altcoins, guys. We've had so many different, even myself, I'm not going to lie. But I haven't been talking about many altcoins to buy. There was one that was ICP. That's about it throughout 2025. I haven't been talking about, buy these meme coins or, buy the other. Or I am buying this, obviously no financial advice. But ICP was one of them that I got in heavy, and I let the people know that I went in pretty heavy. And man, when we got that liquidation event, I was down 50% and I felt, a little bit bad. But I said, hold on, guys, let's hold on. I'm going to hold on here. And it got a rally, almost getting above $9, I think. And as soon as we got above $8, guys, that was a moment to exit. Exit at least, your investment. Because my average price entry on ICP was in between $5 and $6. So as soon as we got above $8, guys, I'm out. I sold over 30% of my ICP to get, my money back, basically. So luckily, we got out safely out of that, and then we got a fresh, free moon bag, right? For whatever happens in the next coming years, it might get an epic recovery, but at least we stay on the safe side. I stay on the safe side. Much love, baby genius. We got news, PMI, interesting. Do we have some interesting news coming in? On Wednesday, we do have ISM, PMI. We do also have it today, right now. Oh, this is just came out right now, I think. Which is slightly lower. Probably the S&P 500 is getting a bit of a reaction here on the news coming out. Not much volatility, nothing major happening. Got a slight move down here in the last 10-15 minutes. Low volatility on this news coming out. Big days of news. We do have Friday, personal income, Michigan consumer sentiment. Next week is going to be interesting. Fed interest rate decision. FOMC economic projection. That's next week. We got some interesting next week on news. Might be getting some interesting volatility. Not much has to be said on Bitcoin, guys. Projections to the downside on the higher time frame till proven otherwise. We are still looking for bearish momentum. The probabilities on the higher time frame is to look for this. Some kind of a wave 4 getting developed here and claiming the lows at 80,500 is just the trend is your friend, right? The trend is your friend. There is a scenario that this extends as well, right? As explained, this could still extend. We got a 3-wave move down for the moment. If we get above 89,500, we're going to have to develop the different possibilities in the next coming days. I will be providing a video update or a live stream. I think a video update, just to be clear on what happens next, to see the different opportunities and projections. But if you do get a bounce here to get above $89,000, I mean, you could be forming a larger corrective structure, right? A sideways WXY, a double zigzag up, you get to 95, 96, right? Almost invalidating the bearish case, right? We can build up some projections on tomorrow's video update as we do get new information. I'll get some stuff ready for tomorrow's video update, so make sure to subscribe to the channel for that video update. Video updates are not getting too much love, guys. No bueno. No bueno. Video update from Saturday, watch before Monday. We talked about the shorting plan that I'm interested in at 91,700 to 800. That was there was levels to long eventually based on reaction, but to be careful. And the only zone to short, if you didn't short here, 93k, was 91,700, 800, right? And whoever watched the video then obviously knew about this execution, this plan that came to fruition throughout late Sunday and part of Monday. So whoever is, I did see some people in those shorts, so congratulations. Absolutely epic. Market is here to short as well, guys, not only to long and buy and hodl. We don't only have diamond hands, guys. We do like to short the market as well. We like to, you know, oh yeah, we need to hedge our Bitcoin bags as well, right? With some shorts, if we can get into a few shorts as well. So that's the beauty of trading as well. Altcoins, not going to take a look at some altcoins, guys. I've had it with altcoins. Thanks for the clarification, Andy. Got my uncle here. Much love to you. Thanks for joining. Everybody, thank you very much for joining. Okay, it's going to be about it. Thanks for smashing the like button, guys. Insane. We've got over 250 likes. Leave a comment section after the stream to share some love. I need to see that support. I need to see that we are going to continue here on YouTube, all right, to provide the education, possible setup scenarios. Right now, still soon. We only got the drop. We need some more information. Once we get a little bit of a range and a bounce, I will be getting those video updates and very clear scenarios and levels of interest to execute those next trading setups that I'm looking for. Thank you very much for joining. Check out down below, guys. You've got some great perks on the platforms that I use. Bluffin for me is one of the main ones that I do use right now. And one that I'm slowly going to transition to is Velto. I am very interested in decentralization, and this one is working pretty good and it's pretty highly liquid. So check that if you want, guys. It connects directly to your wallet. You have the direct link down below to that decentralized platform, guys, okay? Which is absolutely great. The fees are actually a little bit lower than Bluffin and BTCC. Check out the links and perks down below, guys, to support the channel. And I will see you all in the next one. Thank you for joining. Thank you for smashing the like. Thank you, Staffer. Thank you, Crypto Big Brains. I'll see you tomorrow.